Good afternoon, everybody. Welcome to the December 2nd, 2022 edition of News from the Front Lines of Business by D.W. Huff Consulting. I'm David Huff, CPA. I'm kind of in charge here, but anyway, here we are. Another week has passed us by here, and a lot of year-end planning kind of going on. Not too much news on the, I guess, from the front lines as far as IRS and that kind of things go. They're definitely still kind of slowly processing things, and turnaround time is definitely but it's improving, but still kind of bad as far as any kind of mailed in documents you may have in. So just keep that in mind. Be patient. I know we had a few people this past week asking about some refunds on some prior submissions, and it's really kind of difficult to even find out where things are in the pipeline at the IRS now, because some of the, if you're trying to do it via the phone, if it's not one of the more ordinary things that's tracked on the website, still pretty long wait times and just difficult to get through. So be patient. But as we talk about some year-end things, so this is a feature in QuickBooks that's in 2021 in future versions, 2021, 2022, and later versions, and I just came up with a client they have a lot of assets. So this is a particular client, small business, and trucks and heavy equipment and whatnot. And a lot of things getting bought and sold, and sometimes it's kind of tough to track those things for when it comes down for tax purposes, because you might trade one in or another vehicle, and a lot of times it's not crystal clear what happened to it. Sometimes you got stuff that's showing up on the books that's not really there anymore for one reason or another. But to help out with the keeping track of this stuff, there's a feature in the later versions, and it's this fixed asset item list. So if you click on it, here's what it kind of looks like, how you get to it from that list menu. Here's what the list looks like. It shows all the stuff you got. Some of these other screens here kind of show you, what general ledger account you may have coded to, when you acquired it. Definitely helpful stuff. And then when you click down on the individual items to kind of put in the detail, there's a lot of information that it tracks for you inside the accounting program. So I really like this because VIN numbers, PO numbers, what asset account you recorded to when you bought it. When you dispose of it, you can put the disposal date and run some reports via that kind of stuff. So very, very helpful if you have a lot of turnover with pieces of equipment and things like that, and you just want to be able to track things. So yeah, it came up because this is something I hadn't used it very often, honestly, up until we kind of playing around with some things and for some year-end work, and we saw this was available, and I clicked on it and kind of jogged my memory on it, and then so I'm thinking it's worth a look if you got any kind of substantial fixed asset activity going on. So keep that in mind. Your QuickBooks tip of the week there, and of course we have QuickBooks tune-up and some classes at year-end if you need any more. And if this jogs your memory about any other things you might need besides fixed assets, this is the time of year to start looking at that stuff, so you can get an idea what your income is and do some tax projections and just kind of see how good or how bad next year is going to be for you at tax time. Also on a tax, I guess, planning front here, this marginal tax rate versus average tax rate. So most tax programs, at the end of the process, you get a report and it kind of tell you some basic information about your AGI and whatnot and average tax rate. And I think I wanted to point out here. So this came up in another discussion. So my software shows the marginal tax rate, so which bracket you're in. So the marginal tax rate is just your bracket right here. So on this chart that we provided a couple weeks ago, it gives us a 10, a 12, 22, and so on, a different tax bracket. So that's my marginal rate. So it's important to know which bracket you're in for the planning purpose, because that's really where your decisions are going to be made. So in this one client's case, because of the way things worked out, they were in the marginal 22% bracket. However, when you blended it all together, because each dollar is taxed at when it's within its own bracket, and some of the first $25,000 in the case of a married filing joint isn't taxed at all. When you average it out, it's usually a lot lower than your marginal tax bracket. So in this case, they had an average rate that was showing like 15%, So as we're talking about some expenses for the business and things like that can help bring things down, she was thinking, oh, well, I'm only saving 15%, so what's the point? But the point is, you don't make decisions at the average rate. You make decisions at the margins, is what they call it. So because you got to assume that what happened, whatever's going to happen has already happened, and there's one thing you're looking at now that you need to make a decision in is going to be at the margin. So in that case, really should be looking at the 22% rate, because she was at 22%, and that was our bracket. So anything I do now, I got to assume income's the same. We've worked through the tax-free amount. We've worked through each of the brackets, and we're in the 22% bracket. Anything we do now is going to cost me at least 22%. So sometimes those numbers could be kind of widely different. When you got self-employment tax issues that kind of work themselves in there. That's another additional tax to the bracket. So at the end of the day, you got to know your marginal rate. If you're self-employed, it gets a little bit more complicated. But yeah, sort of the average rates aren't very, very useful for decision making. So that was something that came up that's appropriate for this time of year. But so that's really all that really came up with. Investment wise, it seems kind of a boring ho-hum stock market going on. So investment wise, nothing too crazy is going on. But yeah, we do mention this is the time of year to take a look at little tax loss harvesting. I didn't put it as a point of discussion here, since I think we've already talked about it. But definitely December is the time to look at those gains and losses that you had for the year, whether the things that you've already closed out by selling the stock, or unrealized gains, so it might make it, might be able to be used later if you have losses to offset it, or you might have losses that in the current year that are unrealized that you might want to use to reduce the effect of some of your winners. So all those usual things. But you'll be seeing an email from me with probably 8 or 10 of the more regular planning topics, and a couple more advanced topics that are going to affect our small business owners. So be on the lookout for that. And if you need it and you don't see an email from me, send me an email. That way I can make sure this document makes it through the spam filters. So, anyway, closing thoughts here. So it's the weekend of the Krampus parade here in New Orleans. So, as you know, not a huge fan of Christmas with all the commercialism and spending and lack of focus. So I've kind of gravitated towards the Krampus kind of anti-Christmas kind of thing. I'm really enjoying it. So I'm going to enjoy some of this gorgeous weather out here today, and kind of have some fun. Watch football, doing Krampus, all the usual things. So I hope you can do the same and just enjoy your weekend and your nice weather. And we'll see you back out here next week.